Welcome to the Stock Network's ASX Gems Investment Conference. At TSN, our mission is to connect investors with fresh stock education and deliver digital investor access that empowers investment decisions. Recently, the signs of growing global tension have become difficult to overlook. Defence is rarely an easy conversation. It's about threats that we hope never materialise. But the sheer scale of investment flowing into this sector shows us one thing clearly, that it can't be ignored. That's what compelled me to launch the Defence Spotlight for our ASX Gems Investor Conference. Today, we have an opportunity to cut through the noise to hear from the experts, thought leaders and ASX-listed companies shaping Australia's defence future. You'll hear from Steve Baxter, one of Australia's best-known entrepreneurs and a former Shark Tank star. Steve now leads Beaten Zone Venture Partners, a fund at the forefront of investing in cutting-edge defence technology. We'll also hear from Major General Gus McLachlan, who oversaw the modernisation of Australia's defence capabilities during his 37-year career in the Army, and a whole host of ASX CEOs at the forefront of defence in Australia. This is your time to sit back, tune in and take notes, because investing is about being informed, prepared and positioned. Welcome to the Stock Network's ASX Gems. Steve Baxter is one of Australia's most successful tech entrepreneurs, best known as a shark on Shark Tank and for founding multiple successful ventures. Today, he leads Beaten Zone Venture Partners, an investment firm with a sharp focus, backing founders building disruptive technologies that strengthen Australia's sovereign defence and space capabilities. With billions of dollars of government commitments to defence modernisation and heightened global security tensions, the defence tech sector is emerging as both a critical national priority and a unique investment opportunity. I'm joined by Steve today to share his insights on navigating defence investments, spotting high-value opportunities, and the role private investors can play in building sovereign resilience. Steve, welcome to the Stock Network.
G'day, Lels. Thanks very much for having me.
Now, defence and space technology sit really at the intersection of national security and innovation. What do you think makes this sector a distinct and often misunderstood opportunity for private investors?
Well, I suppose what makes it the current opportunity is, it's all a bit sad, to be quite honest. It's at the moment there's a lot of global uncertainty. We've come off the back of probably close to 3 decades of historically low defence spending. And to be quite blunt, the tyrants are on the march. You have the horrible situation in Europe where there's a mechanised ground war raging, which is just terrible. And then you've got the constant threat of China wanting to take over Taiwan, which, and I think we learned from the Ukraine situation that when tyrants say things, we should believe them. So now what makes it an opportunity here in Australia is we've actually got a pretty good R&D base for most technical things, to be honest, and defence included. So we're not overly blessed or under blessed in that respect. We're a good place. We've got some great commercial and corporate and government incentives, R&D tax incentives. We have great investment incentives as well for this sort of stuff to occur. We're not the natural place to make these things. We're the natural place to create these things, you might say. As this historic underspending defence is being fixed, you're seeing the Europeans being dragged from 1.8, 1.3, 2% up to 3.5 to 5%. Australia will eventually get dragged into 3.5%, kicking and screaming, and just enough so our current Prime Minister can point at the orange man and call him bad. So look, there's a lot of opportunity out there. Like most of the tailwinds are very real. There's historic underspending. We've got great opportunity, and defence is essentially an unloved asset class, irrationally unloved asset class. Excuse me. And it's irrationally unloved because we really shouldn't need it. It's a bit ugly, human conflict, but it's existed since we walked out of caves. So as a result, there's not much investment capital in there. So it's a pretty good buy-side equation, to be honest. So it was a long answer. Sorry, it was a long answer. Sorry about that.
You don't need to apologise for long answer. I think you really hit it, though, when you said an unloved asset class.
Irrationally unloved asset. But you can unlove asset class.
Irrationally unloved. And, when we look closer at that from being irrationally and unloved, on the flip side, you've got a lot of technologies and breakthrough applications. So when it comes to you spotting that winning investment edge, in this sector, what are the key traits that you look for are really in a defence or space startup that to you signal both commercial success and strategic importance?
Well, there's no such thing in the government space as build it and they'll come. And we're essentially selling to governments. So the thing to remember is, and a lot of people don't like, one of the many reasons, I think one of the three main reasons people don't like defence asset class is the perception of a single customer. The government's the only customer. Well, it's sort of true, but they're in our what we call the allied sphere, so we call the allied addressable market. We only sell to allies. So there's roughly 50 countries that an Australian enterprise can sell to without being arrested as a gun runner. So there's technically 50 customers out there. Each one of those has an Army, Navy, Air Force. God bless America, they've got Marines and Space Force and Coast Guard as well. And each one of those services then has one, two, or more special branches in there that can buy off tender. So there's hundreds of potential customers out there. So, the former head of the Defence and Innovation Unit in the US, very well respected defence innovator and procurer, basically was quoted as having 265 organisations inside the US DoD that can buy off tender. So the second reason people don't invest in this space is because of the suppressed returns, because it's mostly hardware. It's government sales and it's hardware. And hardware, from an investor's point of view, compared to software as well, mate, it's harder to get a return from. So it suppresses. You can get returns. The returns are just suppressed. There's a different return profile. The third reason is it's the stupidity and the societal pox that is ESG. The fact that people won't invest in businesses that defend the realm, I just find surreal. And you just exit stage left. You don't deserve to be investing other people's money. So, so in that context, there, how do we spot winners? So what we do is there's no such thing as build it and they'll come. So what we do is we look. So the Australian, I'll get all this in the right order. So I've always been a fan of when you invest, you get these businesses into the largest, easiest market that you can, right? And no market's easy. You always go for easier. So the Australian defence budget, for example, is $35 billion US. It's stubbornly staying that way. $35 billion US. The US defence budget is $1 trillion US and growing. The Europeans are about 0.6 trillion. So there's bigger markets out there. So what we do is we look for demand signals out of the US primarily. The US is it's a great market. We look for demand signals. So we look for commanders and policy stating they need certain things, I suppose. Then we look for piles of money. So we look for budget allocations or units that have freedom to spend on these certain areas. Then we look for an exquisite user. So if we found a piece of capability in Australia, we want to take it to the US, we need to get it in the hands of someone who's going to test it. And the sexy end of that is like your SEAL Team Sixes and your Delta, all the sort of heroic sort of special operators. But on the other side, US Coast Guard are great testers. Space Command's good. There's a lot of the police departments over there are highly militarized, are pretty good as well. So you need to line those up. You need to get your thing in someone else's hands and get them excited about it, wanting to buy it. There is no build it that will come. So we look at that in our market sense. Then when it comes back to businesses, you look at the other stuff as well. Is how big's the market? What are the competitors? So there's all the standard DD that you'll do. Then it comes to people.
Yes. It is refreshing to hear you be so honest about the challenges of investing in this space. We all know the regulatory, political, procurement. There's an extensive list of challenges. But and you are a professional investor. But when it comes to the everyday investor, what practical advice would you offer them to cut through this complexity and also position themselves wisely in this space?
We have a fund now. I shouldn't say that, but I'm 30% of the fund, so my GP exposure is quite large. So what advice would I give others? Look, in general, I talk a lot of people who want to be angel investors, for example. I always say I've got like 97 companies I've invested in over the years. So take a portfolio approach, because if I knew which of those 97 was going to be the best winner, I would have put all my money into that one. You just don't know. So, and start a lot slower. Just start slow. I thought I started slow, but I would have started half as slow again, to be honest, when I entered this journey. So look, start slow. There's some really good books out there. I'm not a huge fan of. There's a lot of, I don't know your audience, but there's a lot of wank out there in books, to be honest. Excuse me, but there's some very practical ones out there. I think that's just in this space. And if you're getting into the angel investing space, there's a book by a chap called Jason Calacanis, who's very well known now for the All In podcast. He always seems to be the one getting his backside handed to him in arguments, which is pretty funny. But it's a book called Angel. It's actually quite good, to be honest. There's another book. There's several out there. I mean, that's probably a good one. Yeah, I'm more in the venture space. So if you're looking at the sort of venture related stuff, then you look at probably the hard thing about hard things in venture deals. So they're good ways to get an initial handle on this space, I suppose. A good way for people who don't get exposure to wholesale, and we're a wholesale fund, so the whole 708 thing, you need to be a certain government needs to anoint you as being able to invest in our fund as being wealthy enough. So whilst you might be able to go and lose your house at a horse race, you can't actually lose your house investing in something else. Sorry, that's a libertarian in me coming out. But I mean, there are we have a surprisingly good defense. Our local bourse is surprisingly got some good defense stocks on there, to be honest. So even DroneShield has got a lot of play of late. You have Austal, you have EOS, and you have XRG just as a conflict there. I'm the largest shareholder in XRG. Was the founding shareholders. So, but they've gone through a hell of a time. To be honest, they're coming through it now. So there are some good listed companies there. There's also, companies if you're in that listed, if you're looking at doing listed investments that have exposure to defense contracts, I suppose, through supply of materials. And critical minerals become a massive issue in the next, it should have been from 10 years ago, but critical minerals is now becoming a massive issue. So I don't know who to back there, to be honest, but it's something that needs to get sorted out. Space, we like space. Space is so well named, because there's a lot of it. There's a lot of space out there, basically. So like in low Earth orbit, which is between about 200 kilometers to 500 kilometers above the Earth, there's 192 billion cubic kilometers of space. So, from that perspective there, and there's 15,000 objects up there, about to go to 100,000 objects in the next 10 years. I often get asked, will they collide with each other? I'm like, there's 192 billion cubic kilometers. I don't think there's enough room for everybody. So, and in the military domain, space is getting a big workout there, and it's going from sort of, space communication, space navigation, GPS constellations and similar, now to space dominance, which is really, moving to the kinetic end of space, which is going to be a little bit touchy. So there's so much opportunity in space.
Well, Steve, thank you for talking us through all the opportunities, also flagging a whole lot of challenges for investors to navigate. It's been an absolute pleasure, and all the best for your investing. Major General Gus McLachlan is one of Australia's most respected voices on defence leadership and technology, with a 37-year career in the Australian Army culminating in senior command roles and responsibility for 35,000 personnel. Gus oversaw the modernisation of Australia's defence capabilities in areas such as cybersecurity, drones, and command systems. Since transitioning from the military, Gus has built a career in the private sector, serving in senior leadership roles at Boral and advising defence and technology companies in cybersecurity, AI, and aerospace innovation. He currently serves as inaugural chair of the AI and Cyber Futures Institute at Charles Sturt University, adjunct professor at Monash University, and senior advisor to the University of Sydney. Joining me today to discuss Australia's defence outlook and what it means for investors, industry, and innovation. Gus, welcome to the Stock Network.
Thank you. It's great to be with you.
Now, you've led Australia's land forces and been responsible for modernisation programs across cyber, drones, and command systems. From your perspective, how would you describe the state of Australia's defence today?
We are facing an incredibly challenging situation, and I know people have thrown around terms like the most complex since 1939 or just before World War II, but I don't think that's an exaggeration. Part of it is, we've got the emergence of a new or a re-emergence of a superpower, meaning China, after what they call 100 years of shame, where they've been the less than influential country than they've been for the rest of their history. And of course, we've got a new outlook in America, which is to some extent withdrawing from the world. So those two tensions make the Australian defence landscape as complex as I think it has been for a long, long time.
Okay, and speaking about those emerging threats, also global trends, you've served in conflict zones like Afghanistan and Iraq and held international roles across the Middle East and the US. What global security challenges do you see as most critical for Australia to prepare for now?
The first thing I'd say is that we're facing the breakdown of this international rules-based order. That's been incredibly good to Australia. We've been able to establish global supply chains, uninterrupted, high confidence. We've had confidence in the systems, if you like, in the way nations were interacting. Russia's aggressive and illegal invasion of Ukraine, more recently the situation in Gaza, which even as we talk today, we've seen Israel attacking Hamas in the capital of a third country in Qatar. These are signs that the rules-based order is under considerable pressure and probably breaking down, meaning that might is right. And so for a country like Australia, who firstly needs to defend itself and its interests, but also we're a global citizen, we like to think we're a very well-positioned middle power. We've all got to do what is needed to first make sure that we're safe and then see what we can do to help re-establish some of that order. You overlay on that, of course, the emergence of things like AI, which is impacting everywhere in business. Well, let me tell you, in my sort of sector, it is going to be incredibly influential. The ability to put autonomy into these drones, whether these are, autonomous aircraft that could be armed, ground robots, etc., where we're seeing, a new level of threat and an extreme speed up of that technology. Long-range missiles, Australia's, we've been able to be very safe because of our geography. We've got this enormous moat around us, the oceans around us, but the range of these modern missiles mean that that's no longer the protection that we perhaps might once have had. So things like our own Iron Dome or integrated air and missile defence, to use the technical term, all of these are new priorities for Australia, and it's challenging governments to be able to afford, this rapid increase in defence spending.
Now, on that defence spending, you are the inaugural chair of the AI and Cyber Futures Institute, also advisor across cybersecurity and aerospace innovation. You've touched a bit there how you see AI, drones and cyber capabilities shaping the future of Australia's defence strategy. But what do you think really needs to occur, or what do company leaders or government need to see in order for this to materialise?
Yeah, well, there are two new domains that we describe in terms of human competition or conflict. Business leaders will be aware, of course, of one of those, which is the cyber domain. The other one we haven't talked much about is space. The militarisation of space is really significant and, again, potentially impact us all. We all walk around the city with our GPS-guided phones, but we probably don't understand that much more important encryption for things like our financial systems, our stock exchange systems are all done using GPS timing from space. So any disruption in space is going to impact our lives and our businesses. So when you overlay cyberspace and space, these new domains where we can't necessarily see traditional conflict, we shouldn't be naive as to understand that actually I think they're the areas where conflict has perhaps already started, or at least competition. So, we know that major states like Iran, North Korea, potentially China, are looking to achieve penetration of our physical infrastructure so that if there is conflict, that they could disrupt our water supply, fuel distribution, water purification, etc. So, one way to influence a country like ours is to attack our businesses, particularly those with global exposure, and limit their ability to do what they need to do. So business leaders have to pay attention in a way that I think is perhaps even an accelerated area. Cybersecurity, where we've been guarding against that criminal element of ransomware, etc. I think we should be preparing for a higher level of threat, which is the ability to pull down or disrupt, large chunks of the internet at any given time. And space, unfortunately, I remember as a kid watching James Bond movies where satellites sort of opened up and swallowed other satellites and thinking, that was palpably unrealistic. Well, unfortunately, the new space domain will involve satellites manoeuvring up next to Australian communication satellites, for example, and potentially grabbing them, breaking them, or disrupting their orbit, all in new ways that we are yet to comprehend. I wish I sounded more optimistic. These challenges are really quite considerable.
Now, Gus, you've done a great job outlining the very complex and evolving nature of defence, and appreciate the next question isn't an easy one, but if possible, could you answer, what should Australians, whether in defence, business or the broader community, be most mindful of as we look to the next decade of security and technology challenges?
I think you and I are talking in the aftermath of that massive Chinese military parade. And I think what I'd first say to people is, look, let's put behind us the memories of the benign China that perhaps we might have grown up with and we all hoped would emerge into the world as a sort of equal, rules-following global citizen. And I think the reality is we have to prepare for competition. And what that means is business leaders need to understand that disruption is possible, whether that's access to our fuel for periods, whether that's the internet, whether that's access to space. And I know it's hard because there's a lot of inefficiencies involved for preparing for uncertainty, but understanding that your supply chains can be disrupted, that you may need to hold additional stocks in Australia, that you might need to understand particular choke points that you might have, and prepare for periods of disruption. Because if we can ride out those periods of disruption and coercion, then I think they become less likely, to be honest. If we're known as a hard target that is well prepared and resilient, I think that deters any country from trying to influence us. So while it is inefficient, and I wish we could return to those days of click and collect the next day, uninterrupted supply chains, I think the reality is I'd be advising business leaders to prepare for a pretty rocky period. I think we're going to see the bifurcation or even trifurcation of our global systems as America sort of starts to withdraw to a more isolationist position. I think we're going to see, probably rightly so, an emergence of a more assertive and confident China. And then perhaps the third leg of the stool might be Europe. And Australia's got to work out where we fit into those systems and how we work potentially across 3 different systems and markets.
Major General Gus McLachlan, thank you very much for your outlook on Australia's defence sector, and very much appreciate your insights today.
I wish I could sound more optimistic, but I think a well-prepared, resilient Australia is still capable of being the absolute best place in the world to be.
Thanks for having me on the program. I'm Oleg Vornik, the Chief Executive Officer and Managing Director of DroneShield. DroneShield is a global leader in counter-drone solutions, detecting and taking down small drones around the world where they present an issue to human safety, security, and performing other nefarious roles. In this presentation, we'll talk about our recent results as well as the upcoming catalysts. As have mentioned during our half-annual presentation a couple of weeks ago, we have just released an all-time record high earnings as well as the revenues for the period ending the end of June 25. That has included 72 million in revenues as part of our 176 million in locked-in revenues for FY25. We run on December year-end, as well as approximately $5 million of net profit before tax. Importantly, as part of that, the SaaS revenue has continued to increase to approximately $3.5 million for the half-annual period, and customer cash receipts have similarly been surging to an all-time high consistently with our revenue growth. The next slide 3 talks about some of these key metrics, but the main point here is that across all metrics of the business, so revenue, pipeline, as well as the underlying nature of the company, so the number of engineers, the R&D spend, the cash balance, and so on, the company is going through an incredible amount of strength as the backdrop of needing counter-drone solutions continues to rise rapidly. Speaking of the backdrop, so as we've all been seeing in the news, unfortunately, we are continuing to see geopolitical tensions increase, and I think everybody's realizing that global conflicts and wars are not about to go away anytime soon. And wars are being fought in an increasingly technological manner. So both drones and counter-drone solutions are being used all over the world in various conflicts. Ukraine, of course, has been the start of this and continues to be a significant use case of drones and counter-drone solutions, but we're now seeing this all around the world. DroneShield is present in about 70 countries, and when we look at the major theaters of our deployment, so across Asia Pacific, the US, South America, and so on, all of those places are seeing extensive use of drones and the requirement for counter-drone solutions. So the unique thing about drones and counter-drone compared to other defense articles like tanks, missiles, and so on is that it's a very new technology, which means the market saturation is essentially zero. So anybody who's buying either drones or counter-drone solutions today is very new to this. They don't have enormous stocks and they have urgent requirement to fulfill. And even if tomorrow there is peace in Ukraine, which I think we're all hoping for, that does not negate the need by military planners to fill extensive amount of both drones and counter-drone technologies in their arsenals for any future conflict, keeping in mind that defense is first and foremost about deterrence. Counter-drone is, we say, about a US $10 billion market. This TAM was done about maybe a few years ago by us, and we now actually think the number is much higher. But the main thing to keep in mind here is that the market penetration is very low to non-existent. And this is even before you go into the civilian sectors like data centers, airports, critical infrastructure, energy, and others, which we think will require significant amount of counter-drone systems, and we expect that market to start shaping up over the next 2 years or so. A very quick recap on our solutions. So we do hardware and software within our hardware solutions, as well as on standalone basis. So the dismounted being our RF Patrol body-worn drone detector, top left picture, drone guns, handheld jammers. So historically portables have been, or dismounted have been, the majority of our revenues. Now it's roughly half with our drone Sentry, so on the move and fixed site system. And then we have the Sentry Civ, which is our recently released product for civilian applications sold on subscription basis. Underneath the hardware is our software. So we do quarterly software updates for our drone detection devices. We also sell the command and control systems, which are a bit like operating windows for various counter-drone products, as well as we do electronic warfare work, which is software-based long-term contracts that we recently won an extension, $12 million contract for another 2 years. The aim over the next several years is to have many thousands of devices in the field, all receiving at least one, but ideally multiple families of software products on SaaS basis overlaid over the top of them. And importantly, there's also hardware refresh elements. So because the technology of the drones is developing so quickly, anybody buying counter-drone hardware today will very likely need to fully replace their hardware in about 4 or 5 years from now. So you have these hardware replacement cycles in the sort of 4 to 5 year horizon, as well as software updates every quarter, a bit like antivirus essentially. And then I'll finish with the summary of the recent highlights as well as the upcoming catalysts. So the recent highlights are all over the last 3 months. So on the capital structure, we've just been included into the ASX 200 index. Also, prior to that, Fidelity have become a substantial shareholder at about 9.5%. And also, we have been seeing more in terms of institutions taking interest and positions in the business. Historically, DroneShield has been a very retail business, and we still continue to have about 30,000 shareholders in Australia as well as globally. But as we get larger, we are becoming more institutionalized. The record HY25 revenue and profitability, what we just discussed before, launch of Sentry Civ. So as the civilian markets will likely become a significant drive of our revenues over the next couple of years, this is our foray into this space, as well as our main products, which will also serve purpose. So our main products are high performance and more expensive, like Drone Sentry, so geared for military applications. However, there are customers who are looking for more budget solutions, prisons and so on. So for them, SentryCiv is the solution. LEN 156, so we have announced a phase 1 contract win for the portables, and we expect for there to be further contracts. And then importantly, from next year or thereabouts, we believe there's going to be the main rollout of LEN 156, which is the Australian Defence Force counter-drone program, and we believe we're well positioned with our solutions. On the R&D manufacturing capacity expansion, so that's from about 500 million a year to about 2.4 billion a year that we expect to complete by end of 2026. And some of the larger sales contracts, the 9.7 million Latin American contract, as well as of course, our largest ever sale in the DroneShield history, the $62 million European military contract. Now turning to the potential upcoming analysts, there are several brackets of those catalysts. So you have the individual material value contracts, so more of the likes of the $62 million European military contract. Noting we have about $2.3 billion pipeline with about 310 projects. Of them, there are a number of very large contracts, so 30 million or above. And some of them we anticipate to come in the near future, and we'll give market an update when that happens. Then in October, we'll be releasing our September quarterly investor 4C, as well as in January, the fourth quarter update. And these are basically the financial updates. On the tech front, focus on new gen software and hardware, with that focus of having SaaS on as many pieces of our hardware as possible, as well as the next generation of our hardware. On the operations milestones, we are seeing, as previously communicated to the market, setup of the European and the US manufacturing, and also completion of the expansion of Australian manufacturing and R&D. So we'll provide an update once those are done, as well as the expansion of our sales presence. So we recently set up our or beefed up our European sales presence and set up sales offices in Latin America as well as in Middle East, and that is already proving successful in terms of managing both customers and our distributors in the region. So we'll be continuing to invest in those. The M&A catalyst. So we are continuing to selectively, in a very disciplined manner, to look at buy-side opportunities which are of interest to us. We have been doing this now for a little while, and while we have not yet purchased a company, which probably is going to be adjacent technology to what we're doing, we're continuing to look into potential suitable targets.
Well, thank you for having me. Just an overview of AML 3D. So AML is a combination of welding, metallurgical science, robotics, and software. And we combine all four of those aspects into a system which we call the Archimedes system. That's our proprietary 3D metal printing system. It's actually one of the largest open-air turnkey 3D metal printing systems in the world. We have patented technology, and those patents are registered in Australia, New Zealand, Japan, and right throughout Europe. And we're in the process of registering it in the US. In terms of the capability of our technology, we print large industrial parts for defence, oil and gas and aerospace. And these tend to be industrial parts for operating use. It's a fairly large, complex parts. In terms of our technology, it can be deployed anywhere in the world. So you can deploy it in the field at the closest to the point of need where you need those parts manufactured. So AMLs are scaling up rapidly in our demand. And recently, back in February 2023, we entered the US defense market. In April 24, we decided to enter the US by setting up a US technology center. And then in November 24, we raised 30 million from the ASX, from the stock market, through institutional investors, with an allocation of around 12 million for the US. And that is envisaged to be doubling the expansion of the US facility that we've set up in Ohio. So in June 2025, we officially opened the operating facility of our technology center in Ohio, in Stowe. Over the last few years, AML has signed up close to 19 million in orders, and that's particularly with the US Department of Defense, US Navy. And according to Austrade, we're one of the largest exporters under AUKUS, which we're quite proud of. Our growth has been underpinned by a manufacturing license agreement with Blue Forge, and that allows us to have access to designs for nuclear attack submarines to be able to print and manufacture parts. We're looking forward to taking a share of the $951 million allocation which has been given to Blue Forge, some of which has been allocated in for advanced manufacturing and the progression of. In terms of tripling our access to market, under the marine industrial base exists the submarine industrial base, which is our key customer at the moment, and that's been added to by adding surface fleets and munitions under the submarine industrial base. So we've effectively tripled our access to market. We've just been back from the US after a trip for the last few weeks, and while we were over there, we went and met with the PO for Land Systems, TACOM, and also for NavAir. These are sort of new areas that we're looking to grow into outside the submarine industrial base to round out our defence capability. In terms of NavAir, we're really impressed with the progression that NavAir have made with additive, and in particular with powder bed fusion technology, and they're looking to go into other forms of technology. What we're hoping for is their budgets to be expanded when NavAir falls under the marine industrial base next year in 2026. We also met with the Program Executive Office for Land Systems, that's at the US Marine Corps, and we're really impressed at the progress that they've made using additive as well. We're in the middle of just identifying parts that we could manufacture for their land vehicles using WAM, so it's actually quite an exciting process to be involved with. And they've also asked for a containerized system, a concept to be developed so we can deploy our technology into the field. In terms of strong engagement from government officials, we met with Senator Bernie Moreno, who's very good and close friends with the Undersecretary of Defence of Policy, Elbridge Colby. We also met with the Senate Armed Services Committee and the House Armed Services Committee. All are very supportive of AML and the work that we're doing. And then finally, we had Representative Amelia Sykes from Ohio, representing the manufacturing caucus for a site tour of the new facility. What we learned was that there are delays in the budget with the continuous resolution being held up by the Secretary of Defence. But what we did learn is that that should be unlocked fairly soon after the Congressional Spending Bill, aka the Big Beautiful Bill, is approved. Then there should be some funds that will flow post that bill being supported. Congressional representatives are also very supportive of the AM efforts, and what we could see in the budget, in the budgeting process, is that there are certain line items against high priority programs which have been allocated to AM, which is really promoting the fact that AM is taking hold. And then finally, promoting AM in the use of the 2026 NDAA is really important as well. So leveraging the advantage of our technology, so we're advocating now moving forward for the defence policy and appropriations around the NDAA language, and that we can continue to expand that language on how additive is included in the NDAA. Secondly, there's access to the shipbuilding. So we've seen make shipbuilding great again. We want to be at the forefront of the advantages of taking advantage of that as that sort of rolls itself out through the US. And in particular, with our experience in the defence marine environment, we could see that we could translate that into the commercial environment as well. Leveraging our US Technology Centre for the grand opening, we're really pleased to see that we had over 50 people in the session for the grand opening of our facility, and we're leveraging opportunities in the MIB across all three areas to take hold of our additive technology as a part of that. And then finally, expanding into other opportunities. We'll continue to grow our network into the Navy and across the DoD. We're pursuing growth in nuclear in the Department of Energy. We're leveraging MIB activities and access to the UK MOD. And we've just had a delegation from AML's executive team come back from the UK and from the MOD. We're expecting some work to flow from that. And then finally, supporting the AUKUS investments in Australia and elsewhere. I won't go through this, but just highlights the stakeholder engagement, advocacy, and the communication strategy that the company has across not only the NDAA, but Appropriations Committee, and also the approval of budgets such as the CR. On that note, I'll conclude. Thank you very much for your time.
Hello everyone, my name is Daniel Lay. I'm the Managing Director and CEO for Arctis. Thank you very much for the opportunity to introduce Arctis for your consideration. Arctis is an Australian Defence sovereign company and has been working with the Australian Department of Defence for a number of years. What we do is, in the name Arctis, is architected trusted information sharing. We solve challenges for how to share sensitive and classified information between government to government to industry, industry to industry, where intellectual property or classified information needs to be protected but also needs to be utilised across multiple parties. Why do we do that? Well, it's trust not technology that is the greatest obstacle sharing information, and classified information requires higher levels of security than commercial information, so it's a very specialised area. We empower information owners to do that by protecting their own data, whether that's within their organisation or outside of their organisation. And what we do is develop products that are zero trust, meaning validate everything, and apply those access controls and privilege managements to the data object itself, rather than at the application network or infrastructure layer. This becomes really important when you're dealing with allies and you're dealing with communications that are complex, that might need to be segregated or based upon nationality, security clearances, briefings, different roles in the organisation. Now, these applications can be applied to commercial use cases, but right now we're very highly focused in the defence market because that's what's driving the demand for these type of technologies and are under the most threat from the wave of cyber attacks. The Australian Department of Defence is our inaugural client. We've been dealing with them for a number of years, and we've sold a number of our products into the Australian Department of Defence. In fact, we've generated over $20 million in revenue out of the Australian Department of Defence, and we expect that to grow in the coming years. With their referenceability, that's enabled us to take an approach for commercialisation of expanding into overseas markets, and we've started to have some success in that, which is really important. So we use the Australian Department of Defence, which has out of a global defence expenditure of $2.7 trillion, the Australian Department of Defence only spends 1.4% of that. An example of someone who spends a lot more than that is the US, which spends up to 38% of that $2.7 trillion expenditure. And of course, that money all circulates through what we call the defence industrial base, so those supply chain which services those defence organisations. And so it's really important for us as an Australian company to get that global expansion to, for our products, which are in high demand, and be enabled to grow, to access that level of growth that you would expect from an ASX company. Where has that led us? Well, recently, back in July, we announced 2 deals in the global market, which demonstrated that 1, we're executing that really well, and 2, the potential of the sizes of those markets. One was with our prime contractor for the US Department of Defense for 1,000 licenses of one of our products. That 1,000 licenses was to the value of $38,500. And we've provided that organisation initial pricing for the next phase for up to 150,000 users. That agency has up to 450,000 users available in that agency, but services over 1 million users across the US DoD. So that's the sort of network growth effect that we can accelerate into the business over the next few years that is available when we expand successfully overseas and into these markets. Another example of that to diversify our revenue is the adjacent market there of the defence industrial base who need to share. And this is happening across supply chains that are servicing AUKUS, Five Eyes, etc., which you've seen recently announced in the news. An example of that is the $12 billion upgrade, initial payment for the upgrade of the Henderson base in Western Australia, and the total cost of that will be over $20 billion, which is just one program of work that we're seeing in the defence industrial supply chain. Their need to share information is just as strong, And of course, we've just won a deal with a defence prime in the UK. That's a 3-year NC Protect deal, $260,000 for the initial 400 users. That organisation has a global presence and has the capacity of expanding those licenses up to 100,000 users. And you're starting to see, again, the network growth and the multiplier effect. Finally, one of our other products, Cogency, is already the #1 sharing information for defence and the supply chain in the Australian defence industrial base, and has many blue ribbon clients there. SAP is one of our clients. Boeing, the Australian Naval Infrastructure is another client, etc. We previously had Thales on there, Northrop Grumman, BAE, for example. So we're being very successful in Australia. We're looking to expand that business model overseas. And we've just announced the completion of an acquisition in the US to make sure that we can pivot and take advantage of the growth opportunities in the US. The company that we just acquired was called Spherion, and I guess the synergies of that acquisition, there are numerous. The first one is technology. They provide discovery and classification technologies for data-centric security. What Arctis has previously done is provide enforcement and governance tools. So by combining the two companies together, we suddenly have a suite of products that can go across the whole data-centric security lifecycle. That includes discover, classify, enforce, and govern. That gives us a competitive advantage in the market. The second reason that it's a really good acquisition is that, of course, they are already immersed in data-centric securities and have data-centric clients that are investing in the data-centric security journey. They have over 180 customers that are already investing in this journey, but haven't been able to provide them solutions for enforcement and governance to complete that journey. That enables us to have cross-sell opportunities into commercial customers, which diversifies our revenue base, but also gives us experience in that commercial clients to expand the opportunities that we're seeing across the digitization of manufacturing, for an example, biomedical products, etc. So that's a very exciting acquisition. And the last, of course, is it gives us presence in a geographical location, which is the world's largest market, and that being the US. It provides us a base of 40 people and developers, sales team, marketing, that can focus the company for high growth in that defence market, intelligence, state departments, law enforcement agencies, banks, commercials, education as well. So this is a real pivot for the company. It's a transformational deal. We have raised the funds, we've completed the transaction, and now we're commencing the integration work to make sure that we can grow the company. And of course, what's also so exciting about that is it comes with revenue of 17 million Australian dollars in annual revenue, recurring revenue. So that what that means for us is we're moved into from a $4.8 million revenue off the back of the Arctis. We've combined that with the 17, and now we have a pro forma forecast for FY25 of 21.8 million. That's significant growth. It's significant in terms of our presence. It's significant for our customers, and now we have a global presence and we can do support globally, but also we can access all of those global markets. And that means that repeatable processes, we're going to continue to keep our eye on cost, but most importantly, with this acquisition, we can target the market that we need to, which drives all other defence spending and the direction of what technologies get adopted by allies, and that is the US defence market. So that's very exciting for us. Comes with, as I said, those blue chip clients, comes with us and being able to provide an end-to-end solution in terms of the products, and it gives us a launching pad into new markets that we haven't had access to before. So very exciting times for Arctis. It's an Australian story which is now acquiring companies in the US. And that's on the back of the companies that we acquired in Germany for the directive product in February this year. And you can see that we're very serious about executing our growth and targeting our market and increasing our revenues to give the best return for shareholders that we can. But I think it's going to be a very exciting story over the next 2 years for Arctis. I hope you enjoyed the conversation. Please reach out to us if you need any further information. And thank you very much for your time and considering Arctis.
Hi, everyone. Great to be here with you all. And I'm here to tell you about Elsight, the ASX ELS.
coming from communication background. So we are dealing with highly reliable communication solutions. And in the last 5 years, we're focused on the uncrewed industry, which include aerial vehicles, aka drones, ground robotics, maritime robotics, and any other critical mission device that needs to be reliably connected with the operator or with control rooms. What happens to us in the last 12 months is that we're going through a massive growth in revenue, grew the revenue in more than 1,000% to in 2025, from the numbers we just released recently in some of our announcements, we'll get to at least $23 million in revenue, coming from $2 million previous years. And we're seeing massive growth. And I would like to take you through our story in this presentation. So starting with the highlight and where we at today, we are, like I said, providing highly reliable communication for BVLOS solution, beyond visual line of sight platforms. We are uniquely positioned in the market from technology perspective and what we're offering to our customers today. And that's what's driving this massive growth that we're experiencing. The numbers here on the presentations are not accurate. As you can see, this is just from July. Their number is, this $16 million became more than $23 million. The revenue that we have recently announced, we already passed the $11 million in recognized revenue. And the total backlog that we have for the year, for calendar year 2025, is more than $12 million that will be booked or will be recognized this year. In terms of financial strengths of the company, we are already cash flow positive. We also declared that we're going to get to profitability in calendar year 2025. We recently had a funding round of $40 million or 60 million Australian dollars, which set us with everything we need to accelerate this growth and investing more in marketing and sales and new product lines that we are going to introduce in 2026 calendar year. In terms of pipeline and looking on future growth, we did have a massive growth on the past couple of months, but we are seeing a bigger growth coming in the future, or what's coming next, with $150 million, again, all US dollars in pipeline opportunities in different stages that we are starting to convert and to mature as we work with those different customers, both new customers and existing customers. From business model perspective, and I'll go through the business model, but overall, we are looking on highly profitable business of around an average of 80% gross margin in every sale that we're doing, which include one-time sales of hardware and also recurrent revenue coming from the software pieces that we're adding to every system that has been sold. And looking in the next 18-24 months, we are expecting most of the revenue to come from defense and homeland security markets because of what we're currently seeing in the market, and because of everything going on today with uncrewed systems. We are seeing a surge demand there, while we are also holding the commercial market and having a lot of customers in the commercial market for last mile logistics, for agriculture, for different type of use cases that are being used in the commercial. Seeing the numbers on the chart, so you can see this massive jump in the revenue, that we did have nice revenue growth, but in small numbers over the last 5 years. Then in 2025, again, these numbers are outdated because we are constantly shipping more units to customers of today on a monthly basis. So this number here in the top now is $23 million. It's all US. This number here in the blue, that's more than $11 million of revenue that we already recognize. And same here, the numbers of the operating cash flow, and as I said, becoming cash flow positive and starting generating cash, and doing it by having a very profitable business model and growing top line of revenue and keeping those gross margins as we scale and moving to multi-million dollars contract. That's basically what we're doing. So why it's happened now, and why us, why Elsight? I'll start from a macro perspective on the market of what we're seeing currently in defense in general all over the world. I chose here to put NATO countries and how their defense spend look like since 2014, how it's estimated to be looked in 2024, and also how the future is growing their defense budget from 2% to around 5% of what NATO countries signed off on a couple of months ago. And that's not a conflict dependent. So many people think that a lot of this industry is dependent on active conflicts. The fact of the matter is that we are seeing those trends of different governments equipping themselves with a lot of capabilities, let's call it, from different type of assets that they are putting into their warehouses and into their defense departments, let's call it. So that's a long process, and it's not something that is dependent on this conflict or another conflict. We are seeing those trends happening, and we are seeing a lot of programs that are starting to be in countries which are not in active conflict, and those contracts and those programs are growing and growing. And we are, and another very super interesting kind of trends that we're seeing is not only that the budgets are going up, but also the amount that's allocated into uncrewed systems for various reasons growing dramatically. For example, in the US, from the Big Beautiful Bill, 10% of the additional budgets there is solely allocated for uncrewed systems. And that's exactly where we're playing, and that's why we are in the middle of this perfect storm. Like I said before, we are constantly looking and investing also in the commercial market, which will be for the medium long term. But as of now, it seems like the defense market taking most of the business in this sector. So why Elsight? Why now? Like I said before, and what is special about us? So our product, our signature product called the Halo. Basically, what we're provided, as I said before, we are providing superior connectivity. So the challenge is when those platforms, whether they are in the air, on the ground, or overseas, needs to be remote controlled or remote monitored. And it doesn't matter if we're talking about, again, commercial application or defense application, communication and wireless communication, it's a big issue. So the need is for continuous, robust, secured communication link that will be able to constantly work all the time as long as those platforms are traveling around. And we came with a product called the Halo, which is a combination of hardware and software. Basically, the idea is to combine all the available spectrum and networks available around the platforms, which include satellite communication, point-to-point communication, cellular, public, and private communication. And we make all of these into one big, thick pipeline of data that data can be delivered from one end to the other. Just to give you a sense of feeling, today we have more than 450,000 flight hours in different parts of the world, in different use cases, in the most harsh and contested environment. It's battlefield proven and also commercially proven. So today it's about scale and how we take the experience we have from working with more than 100 different customers around the world and bringing it into new customers, and also going with existing customers and growing their fleets of drones or their programs. So all of it together create just the perfect storm for us of basically going into the market, having this massive opportunity in front of us. And as I said, the bigger opportunity is in front of us. Even though we already grew the revenue by 1,000%, we're still seeing these trends continue in both on the top line, growing our pipeline, and as a result of that, the revenue, but also providing more features, more capabilities, enhancing our profitability even more than the 80% that I mentioned before, to be able to go to the market with new offering and new product lines and new technologies that solves different problems. So looking forward, our current main investment is in sales and marketing, opening offices both in North America and Europe. That's where we see the biggest surge in demand and in terms of the market dynamics. We're going to have, by the end of this year, we're going to have boots on the ground both in the US and a couple of countries in Europe. The idea is to both accelerate the conversion of the existing pipeline of $150 million and also create net new opportunities by being on the ground, being much closer to the industry, and being able to execute more leads basically coming from customers. As I said, we're talking about hardware software solution. So I assume you guys have a lot of questions around manufacturing capability and capacity and so on. I would say that today we're using contract manufacturers. We designed a product to be very easy to be manufactured, so that can be done in any contract manufacturer around the world. Today we have 3 different contract manufacturers with manufacturing capacity of $70 million. Part of the announcement we have made recently is that before the end of this year, we will have another contract manufacturer in one of NATO countries to be certified basically with NATO manufacturing, and that will increase the capacity for $150 million per annum in hardware production. So everything relates to production lines and supply chains. We are in a very, very comfort situation of being able to provide the entire pipeline, and more than that, and opening new capacity or increasing the capacity. It's pretty easy process for us as we're using only contract manufacturers. It's not very cash intense. It's very little investment from our side, so it makes it very, very efficient again to increase this capacity as we are seeing it. So last but not least, I want to talk about the key targets that we hit in the last 12-18 months of getting the revenue from low millions, single millions of dollars to tens of millions of dollars. And again, we're seeing these trends only continue by both with the existing hardware and products that we have offering to customers, and also with the new offering that we're going to have. We are seeing a super exciting moment in time for the company and to become a much bigger organization, not necessarily in headcount, but in the actual results that we're putting. And we are in the bottom line, we're checking ourselves on the bottom line and what are the net profits and earnings we are generating for shareholders, and we are seeing these trends continue moving forward. And I think it's super interesting point in time to be part of Elsight journey as we scale our business and going through massive growth opportunity. Thank you very much, everyone, and I hope you'll join the rest of the event.
Hello, everyone. My name is Lorenzo Biagi, and I'm a co-founder and executive director at Vection Technologies. Vection is a fast-growing company listed on the ASX with over 100 active clients, about 200 people in staff, and a widespread international footprint, as you can see from the picture here. Along the years, we managed to develop our own AI-driven ecosystem, which is very scalable and makes it possible to address a giant market forecasted to benefit from about $1.8 trillion of investments along the next 5 years on a worldwide basis. Our value proposition, consisting of the combination of artificial intelligence and spatial computing, which is basically extended reality integrated with proper VR and AR hardware devices, allows us to solve problems for our clients, making Vection a solution provider more than a technology provider per se. We are now generating a blended gross margin of about 35 to 40% with growing revenues and a positive adjusted EBITDA. Our revenue composition consists of about 1/3 of software as a service, leading to annual recurring revenues, 1/3 of custom development and professional services, and 1/3 of hardware, supported by a solid pipeline of about $75 million under negotiation, with an aspirational target for the current fiscal year of about $70 million in revenue. There is not enough time to go into it today, but our AI-driven ecosystem allows us to create value for our clients across the whole value chain, ranging from design and engineering to training and operations, from marketing and sales to customer care and after-sales services, which makes it possible for us to be both very important to our clients as well as very different from our competitors. Thanks to our wide offering, we really have the opportunity to work with high-profile Tier 1 international organizations, but what matters the most to us is the diversity of clients we can really target with the same ease and by using the very same technologies, meaning that our solutions are very flexible and built to be deployed with the real cross-industry type of approach. As you can see from this graph, even if we are generating significant business opportunities across multiple sectors such as retail, real estate, healthcare, and many others, the defense space has recently become the most significant market for Vection. Along the last fiscal year, the defense sector represented about 17% of our overall revenues, and we expect it to double up along the current fiscal year, confirming the strong traction we are currently experiencing within the defense industry. So when it comes to the defense space, as you can guess, the combination of artificial intelligence and immersive technologies can be very beneficial to many different purposes and applications, such as maintenance of technical equipment, immersive training sessions and realistic simulations, up to real-time data collection and enrichment, just to name a few, leading to more effectiveness in pursuing solid and reliable results. Within that space, we are currently working with two main partners, the first one being #1 defense contractor in Europe and NATO-approved partner, while the second one is more focused on law enforcement, international security intelligence, and government agencies. With the first partner, we have secured contracts for $17.7 million along the last 2 years, and we also have recently executed a $22.3 million worth framework agreement, which covers a program rolling out along the next 5 years that might be scaled up to $29.5 million upon client's request. The technologies we are providing our clients with consist of a combination of customized, powerful Dell machines equipped with NVIDIA technologies and AI-driven software solutions meant to be used in field for mission-critical purposes and real-time data analysis. We are also providing the same kind of hardware and AI-driven plus spatial computing-based visualization software solutions to the second partner, but in this case, for cybersecurity and infrastructure monitoring purposes. Given the extraordinary results we are collecting within the defense space, we decided to put in place a specific development plan for this market, which includes investment comprising the development of new sector-specific technologies and products, the extension of our sales team to better support the accelerating sales pipeline, and the expansion to the US market thanks to the partnership we have in place with Dell Technologies and Xerox. All of this means we have exciting times ahead of us, so we really believe it is a good moment for investing in Vection, as we are committed to keep on performing a significant growth process along the next 3 to 5 years. My presentation stops here. Thank you for your time.